Bismillahirrahmanirrahim. I will be continuing with part 2 and spend a bit of time explaining the registration process, investment model, and the financing section. But firstly, the current economic climate has presented itself with a unique way of going about our business, because many of us are confined in our homes and we are working from there. There was an oversupply of office space, largely between the Joburg area, CBD, and Sandton. Added to this is a decline in revenue from tenants, and the vacancy rate might increase because many businesses are in distress due to this pandemic. But this represents itself with an opportunity for investors to repurpose these premises into sectionalized residential units. Back to the matter at hand, there is a once-off registration administration fee of 100 Rand, irrespective of the option chosen. The funds will be invested through an Islamic bank or an institution which does not deal in overt interest-bearing transactions. These contributions will be made for a period of 5 years per chosen plan with no caveats. And the contract will be entered into with the holding company. A share distribution will be based on a 10/90 model, with 10% for professional fees and 90% which will be distributed to members. And the Stokvel fund will be managed by Iliproc. 2. Investment model. This section is based on responses received from the survey conducted, with findings confined in Soweto, mainly for illustrations purposes on what can be achieved. We took a total of 3 units as our comparables and looked at their characteristics in terms of the transaction purchase price, the conditions of a sale, the financing terms and market conditions, the size of the unit, the rate per square meter, market adjusted normal purchase price, the site, the construction quality, the depreciation, the living area, the number of bathrooms, and finally the adjusted purchase price. This table here is used as a basis of indicating how property investment functions, given an average market value of 400,000 and an average unit size of 37 square meter and an average rate of 10,900 in and around Soweto. However, investment acquisitions will take place throughout the country, including the richest square kilometer in Africa, Sandton. This table here represents investment options. A sample is based on 10 members with Plan A, where a member will contribute 100 Rand per month at a growth rate of 7% per annum, having a total future value of 2,568 after 24 months, and will have a 3.2% share of the contribution. Added to this is the profit sharing in terms of ratio. This plan is likely to have more people opting for it due to its affordability, hence it is reflected at 60%. Plan B members are meant to be contributing 500 Rand per month at a growth rate of 7% per annum and a total future value of 12,840 after 24 months, wherein a member will have a 16.1% share of the contribution. Also included profit sharing, which will be in terms of a ratio. This plan is projected to have an average number of people selecting it, thus allocated 30%. Plan C membership ought to be parting with 1,000 Rand per month at 7% per annum growth rate, having a projected future value of 25,681 after 24 months. At this point, Members will have a 32.3% share of the contribution profit sharing, and in terms of ratio, this plan is likely to have fewer people choosing it and is placed at 10%. This is the finance section, and we look at the amortization table. As seen from the previous slide, that the subject property will have a projected market value of 100,000 and an LTV of 80%. And members will continue making contributions for a period of 2 years, and we will have raised an estimated amount of 79,611, which will be put in as a deposit for the required bond amount of 323,722 at the current interest rates of 10%, which were based on the prime interest rates of 2019, compounded monthly at 0.83%, and the loan term is 20 years, and that's 240 months. And the balance of a loan after 3 years will be at 305,910. A further contribution of 3,100 by members for 3 years, that is 36 months, having a projected future value of 123,783, where members will have an option of either withdrawing their investment or devoting the funds back into the scheme. Performance of the property Stokvel fund after 5 years. The unit will have a gross income of 400,000 and a net income of 3,686, with a bond repayment of 3,000 per month. After tax cash flow from the unit is projected to be 30,400. In a period of 3 years, the market value of 447,000 at a residential growth rate of 3.5% per annum. If the unit is sold after this period, the proceeds will be 141,000 minus the mortgage loan owing from the financial institution of 305,000. The total value of the Stokvel will be 265,000, where 10% will be paid towards professional fees amounting to 29,500, and 265,900 will be distributed to members or reinvested back into the scheme, and give members an opportunity to plow back their earnings and grow their property portfolio. The distribution of profits and ownership share will be as follows. For Plan A, a distribution of cash or equivalent of 4,975, and the unit ownership of 14,425, whilst subtracting 9,868 of the balance of a loan after 3 years, with a total value of 8,579 in the scheme. For Plan B, cash sharing or equivalent is 24,876, with the unit ownership share being 72,126, and subtracting 49,000 of the 3-year loan balance, getting a total value of 42,800 in the scheme. And Plan C, a cash dissemination or equivalent of 49,753, and acquiring unit ownership share of 144,000, and further subtracting the 98,680 of the remainder of the 3-year loan, thus giving us a total value of 85,700 in the scheme. The ultimate goal is towards growing the Stokvel into a property development fund, with the value chain underneath it by acquiring a typical Soweto council house as depicted on the slide, thereafter redeveloping these into sectional units or a share block scheme, which must conform to the Companies Act number 71 of 2008 with a development time frame of 1 year and an average unit size of 27 square meters with the gross building area of 250 square meters. The gross lettable area of 213 square meters at the rate of 111 per square meter and an anticipated rental value of 3,000 per month. The projected development cost will be 1.9 million and a capital value of 2.3 million and a profitability index of 19% if units are disposed or sold immediately after the development. There are various stakeholders in the real estate sector as shown here on this slide. The aim is to support the black-owned enterprises and provide training and development to the youth through various stages in the development while realizing the return on investment for the Stokvel members. The property Stokvel will be managed by the managing agent who will appoint subcontractors in the value chain. The goal of the scheme is to empower individuals who would ordinarily not have the power to participate in the real estate sector due to its capital-intensive nature, which is a major barrier and hindrance to many. With this proposed project, countless members of the society will benefit, ultimately reaping the rewards which come with the real estate sector. The end. Thank you.